Welcome back to another video for the Elliott waves. We'll be discussing the characteristics of the Elliott waves. As in the previous video, we seen the basic rules that's supposed to be followed when we are plotting the waves for the Elliott waves. So we will be revising that video and we will be discussing the characteristics of the waves as we tend to see them repeating on the normal basis. So there are many guidance over there. I mean, what to look for it, but I have a different view on it, and we will see what do we encounter in the real life scenarios. So the basic rules earlier that we went through was, let's see, number one rule was wave 2 never retraces more than 100% of wave 1. So what that is telling us basically that if you are plotting anything, if this is my 0 over here, 1 is over here, then wave 2 should not be tracing back or going lower to my start point of 0 over here. So that's a very basic rule, number one over there. Number two rule was wave 3 cannot be shortest of the three impulse waves, namely wave 1, 3 and 5. So we know that there will be waves happening in any directions when there is a side trend lines. The move will be happening in the waves. This is my 0 to 1, then 3 wave, and this is my 5th wave. Those are called impulse wave. When this impulse wave happens, it's in the major direction, and the wave 2 and wave 4 is called correction wave. That will be in the counter trend that we have ongoing right now. So those are our corrective waves. That's what they are talking about. So they are saying basically wave 3 cannot be the shortest of any wave, or cannot be the shortest of the three impulse wave, namely wave 1, 3 and 5. So this wave cannot be the shortest. In real life scenario, if we are talking that wave 3 has a tendency of being equal to 1.618 of wave 1 over here on the normal scenarios, and that will be called as normal wave 3 if it is matching by 1.618 of wave 1. And if that is the case, then what do we expect on wave 5 theoretically is the equality of wave 1. So this wave and this wave, number wave 1 and 5, normally in real life scenario tends to be equal. Or if this wave was equal to wave 1, then number 5 is going to be extended wave. And what will be the value of number 5? 5th wave is start from here to here based on equality. If you want to give it, then it will run from the valuation up to here, $13 to 298. That was a run of 285. So that's telling us the other run, if that's going to happen, you add, what was the one, 285 to this one, 185, 285. So that gives us 85. What is that? 270 and 200 more, 470. That is the projected based on the rule book over here. But on normal life scenarios, there are many different variations happening. And the main basic rule is wave 4 never enters the price territory of wave 1. So while plotting, your wave 4 is coming over here, then there is something wrong that you are plotting. Your charting is not correct. So wave 4 should not enter the territory of wave 1. So those are the basic rules, and let's talk about their characteristics now. And as we mentioned that we will be discussing the stock of Tesla throughout our learning process, and we will be going today basically from the beginning run, and we will be focusing more on the ongoing scenario over here as well and what to look for it. So let's zoom out to the very first basic wave that was set up over here. Right now I'm using TradingView website. I'm not affiliated with them, and I don't get paid for their promotions or anything, but this is the cool website. And we are on a weekly basis, chart weekly chart we are looking. So this is my wave one I'm calling. If we see the characteristic, let me show you the slides. Very first wave could take any form, but mostly will take multi-year or more time to be developed compared to same degree waves. As we know, any waves that is happening, they will have internal waves. If we are talking about wave one, there will be internal waves over here as well. This, if we see, this could be my 0, 1, 2. We have to zoom in, I mean, make it to day to analyze more, but that's what they are talking, I mean, internal waves. So right now let's talk about the wave one. Wave one, if you see, this is, I mean, it's not even beginning. The Tesla's beginning happened from here actually. 2007, 2008 bailout money came over here. This is my 0 in reality. When it was developing, this could have been happening in the 5 waves as well. Let's discuss this. It will be very interesting. So we are in 2010 actually. So this is my wave 1 over here. This is my wave 3, 4, 5. This wave ended and the correction happened over here. Let's see what were the calculations based on Fibonacci that was given at that point, which is very long time ago. People will say, why you want to go and analyze the stock chart during that time. So this run, if we see, so what we use over here to plot it, which is called trend based Fibonacci extension. Basically, this is my start point. You put a 0 over here. This is my 1, this is my 2. The wave ended, and if we see the wave 3, which was ended over here, was almost more than 2. So basic rule was, I was expecting a run over here 1.618. Then what to look, that we will talk in many videos, probably not in this video. After that, we have to start looking the terminations points, how to predict those. There is not a guarantee in the market, not even a single day, I mean, but the clues are there, and you have to think about the both possibilities over there. So this is my 0, 1, 2, 3, 4, 5, and the correction that happens up at the 5th wave, that's going to be the bigger of the correction of this, and this, the valuation is going to be bigger in this one, looks like to me. If we add it up from here to here, and this valuation, it's going to be 2 times more than this valuation. The correction, I mean, that's a normal tendency of the correction happening after the wave flipped. Let's see what will be my terminations point for wave 5. Based on the equality, 2.38 was given actually over here. So that's pretty cool. It went to 2.446 cents up. Or the other scenario were telling me 2.35, 2.49, 2.63. Now there are so many Fibonacci ratios over here. Which one to look in real life scenario? I was criticizing earlier, that there are many different ratios over here. One of them is gonna hit it for sure, and people will say, oh yeah, I mean, this was expected. No, you have to start analyzing more and more in detail, and you will find the clue. This one, okay, let's say this one was giving me 2.35, I mean 2.44 or 2.42, which is still good. I should start looking for the terminations from signals over here somewhere. If I'm a fan of candlestick charts, I should start looking the candlestick charts over here. These are my showstoppers over here. If you look at it, it was giving me quite a few 4 days. 5 days it was giving me a warning. The way the candle shoot out over here, that was clearly sell signal. Again, it tried to bounce back over here. It's not happening, and these are the signals that you have to look for it if you are holding and if you miss the rally over here. So that was a long time back ago. Let's cancel this one. Let's go back to weekly. So we were talking about the characteristics of waves. Basically, we will be talking about the characteristic of the wave 1, wave 3, wave 5, and the correction that happens after wave 5. Correction is very complex, so we will not talk more in detail right now about the correction, as that will require more time on it. But we are excuse me, we are looking to see the characteristic of wave 1 at the moment over here. I will send it this chart to bar settings as well. So if we are looking at it, wave 1, when the wave 1 is developing, it will take multi years basically, and the reason for that, many structure changes will be happening in the company on the operation basis, and that time will be some quarters company will be coming with the good results. Some quarters, I mean, they will not be meeting the expectations of the market, and they will get punished over and over, and that will take a good amount of time from their end. So that is, wave 1 typically spans a huge amount of time to be concluded, and it's the nature of the wave 1, it's corrective, and it takes a while to go to finish the wave 1. But once the wave 1 is finished, then it's a smooth ride for the company. So this is my wave 1. The correction that happened after wave 1 was ended around here from at 22.92 from around $65. If you see, the valuation that was given up during this run was actually, in fact, 78% of the valuation run that was from here. So yes, normally wave 1, typically wave 1s are basically will eat the run of that wave run percentage wise by 62%. On a minimum cases 62, 70 or 78%. I have seen it. One advice, if it's going below 78, then I consider that stock to be a dead stock to me. Yes, people make money out of it as well, but then it's not good for a long term. I have many examples on that as well. So this is the case of Tesla, that it took tremendous amount of time to develop. So why are we talking about the wave 1 when it happened already in Tesla? It's not going to happen in Tesla again. Lots of people say no. The reason is that we are looking for the characteristic of wave 1. Every wave has wave 1 in their body actually. These are the weekly candles. Then we have to go and do analysis based on daily charts to see what is the wave 1 for this wave 3 actually. So we will try to find wave 1 on this run, and we will see the characteristic of that as well. So as we know that wave 1's characteristic should supposed to be that it should be correcting major run that happened. What else we are looking that good amount of time it's spent. And what happens, one thing, when if you see carefully, the angle of the run changes in each wave, and yes, there will be some slope changing happening in the waves, and that will be the good visible clue for you guys to decide which one, where the termination's happening, and how to label my waves correctly. If you can't, that's fine. It's not a big deal. There are many ways that will give you the productive results. So I can call this, let's make sure that you have a good visibility in your chart. If I do shorten, I will not be able to see my chart properly correctly. This is not the proper scale for me. So let's zoom in now, so I might be able to look properly over here. So for this run, I can call my this wave 1, then 3 could be happening here or here as well. If you see, the angles are same. So I'm still looking at it, and I see one thing happening over here. This was major consolidation over here, correction. That was major as well here, but the amount of time spent over here was larger. So this could be my one. I believe earlier this was my one, but this was the internal one of this bigger wave over here. Let's see the Fibonacci trend base extension and what are the valuations we are getting on it. In this run, the market Tesla was strong and it gave up the gain of 23%. Remember one thing, major scale level, major waves we are talking right now. So this was my major wave cycle 1 over here. The gain was given over here was 23%. When the wave 3 happens, the major wave, and the correction that we are expecting will not go more than 50% in normal cases. So if we see the run from here to here, this is the characteristics of wave 3 in normal runs. It came somewhere around below 38, so this could be around 44 or something, but that's 50. It could have ended up over here. So that's what I'm trying to let you guys know, that if you start plotting the waves, you will be observing, please try to observe this as well in your charts, that what is the characteristic of your company that you are looking. In the previous video, when we went through Tesla, we had plotted the tendency of the Tesla. I believe it was not very first run over here, it just gave up that much percentage. After that, if I am measuring from here to here, it's giving only 23% up until it reached 410 over here. Then the graph for Tesla change, and it's still changing for Tesla. So we will see what more it can tell us. So this is my, I was claiming this to be my one, but as I'm looking over here now, that is wrong for me. I'll be calling this my one actually. I don't know where is my 3. 3 could be here and 4 could be here, but based on the main rule that it should not interfere the body of wave 1. So this is wrong actually. The plotting that I'm doing is wrong somewhere here, so I have to correct it. It doesn't make a difference, but this is not my wave 1. The outcome that I am looking for the run to see what happened. Let's say if you are here in real life scenario, you want to see, you are not able to find wave 1, it's fine. Just Fibonacci trend based over here, you plot a chart, this one. The termination points, basically if you are looking based on the equality run of from here to here, was 1. So this one was the very first termination point. Other termination point could have been anywhere of this scenario actually. 1.68, there is no guarantee. What else I am looking over here is, don't look on this one right now. So I don't know where is my wave count over here. Earlier I was plotting this 1, this 2, this 3, this 4. I'm wrong here somewhere. So still I'm convinced that this is my 1. I want to call this one my 1. So I'm gonna call this 0, 1, 2. I don't know what to call my 3. 3 is here or here, I don't know. Let's see if those angles can give me a better idea. Let me just plot it over here for now. So if I see, this is the wave that we are talking. Okay, the angle was here, there is shooting candles happening over here. So that could be the start of wave 3. The characteristic is this one is the correction happening over here for a longer time, and this one is shooting up. If you see the when the wave 3 is happening, there should be a shooting candles. There will be a gap up openings happening, so in that case there will be a trigger. Losses, stop losses will be triggering, and that will add a fuel to the rally actually happening. And you can see, I mean, it started from here and it shooted, I mean, for many days, and the stop loss will be triggered and the orders will be executed based on the panic, and that adds fuel to it. So still I'm not able to plot my charts over here, 1 2 3 4 5. Or based on this, what I've seen, this is also one of the shooting stars. So this wave and this wave has same characteristic for it. So let's change this one. Actually, this one is my 3, this one is back to 4. My wave 1 is going to be this one, the very shorter one over here in reality. It's not gonna help you anything to see that this one was my wave 1 basically, but I said let's assume that we are here and let's see what are the chances of the termination point happening. One was 255 based on the equality. Even before that there was a chance that this could have been my termination point, but at that point we will be looking on the daily chart to analyze and see if it's giving us for the termination of the wave at that point. So let me delete that one. So let's talk about the major waves that happen in Tesla. Let me delete this one. So far so we talk about that the wave 1 can, when the wave 1 happens, the correction that we are looking after wave 1 is going to be the very complex correction, and that could eat up easily 50 to 78% of the run for the wave 1 actually. And who knows, at this moment if we are looking, this could be my 0, what we are looking here, this could be my 0 1 2. Let me, okay, I have to plot it, sorry, 4 5. Do not focus on 3 4 5 right now, it's not correct. I just plot it for you. I should not have done this one. That's fine. So the reason is to show you guys what we are looking in Tesla is, if we are going to see this, it's almost at 0.618. So this could be the good bounce point, 176. Second one is 160, and then 143. We have to start looking the clue what we are looking over here. So when the corrections are about to end, we should be able to plot easily 5 wave coming down based on the Elliott wave theory. There was a clearly 5 waves happening over here in this run. This is 0 1 2 3 4 5. That's why I was hoping that, you know, if we don't come down below 193, then this will be the run. But the results came, they were not satisfied with the guidance for 24, and it started coming down. So what I'll be looking is this point. This one was the 0 1 2. This one was the termination point of the wave 2 over here, and the rarely happened. So this 164 should be holding, and that is the biggest resistance, and many people, many algos or many AI nowadays will have this as well in there as a trigger buy, because it's psychological. I mean, people look for those. The algos are going. They are going to be smarter than us. But 164 for some reason is the key for me to look for. And if we see based on the Fibonacci ratios, we are coming closer to 0.70 on it. It's 164, and if we are going on fibs, it's telling me to go and check 160. So we will stick to 160 as per the fibs, and the warnings will be over here around 164 level. This is my 164 level. We have to keep an eye what's happening around 164. If I'm looking this chart based on hourly, so we were talking about the waves, wave 3, wave 1. So this one was recent rally from October 23. This one was my wave 1. If we are looking the characteristic of wave 1, that it gave up the gain to 0.618, 62% of gain in this run was given up. If we are going to see what was the gain it gave up in wave 3, you start plotting from here to here, it was 0.50, and wave 5 happens, the bigger correction comes after that. Actually, that is pretty neat, um, if you know in well advance that what to look for the correction in wave 5. Let's draw the valuations of waves based on the Fibonacci trend extension 0, 1. Wave 3, 1.618 is my normal, was here, or it could be 1 on some cases, but it went to 1.272, 1.38. We do not have to literally keep looking at those scenario golden ratios that is telling us, but we have to keep an eye. The very first, if it's I'm here, I'll be looking at 1.618, and I'll start looking more closely on the chart minor levels from this level actually to see what's happening over here, to get me the clue if this has happened. And this has never be one time it tries to bounce back, second time it tries to bounce back, third time it comes, it does not. It's telling me this is my somewhere around the top. This could be my fifth at that level, who knows how's the chart plotting. So but the warnings are given around here, and we should be able to act on the warnings on time to time basis if we are short term traders, or depends on your horizon. So this one was okay. So wave 3 is supposed to be 1.618 in normal scenarios of the evaluations of wave 1, but that was not the case in this one. So what I'm looking for wave 5, wave 5 should be off from this run of 1.618 valuation 280, or on the second thing based on this it should be equal to 287. This wave did not match any criteria, the fifth wave. The way I'm looking, the valuation from here to here and here to here was equal. Let's see, almost. Let's just delete this one, and price 32 value. Value wise this was 36. It's not exactly the same, but yes, the warnings are here. I failed to gauge this one as a top in recent one, but the warnings were given actually, but I ignored it, and it happens time to time. Still I do the mistakes, everyone does it, but it's better to catch it earlier than later on. Let me change it to 4 hours. I need to see something. Let me go to 2 hours. Is it clear? I don't see anything here happening. This is my correction. What I'm looking the zigzag waves, like A, B, C. This C, what's happening, could be in 5 waves. I'm looking to see one zigzag wave, but I'm not able to plot it over here very clearly. Sometimes, not sometimes, I mean many times it will happen that you are not able to see it correctly. You do not have to force yourself to find to label them. um, Sometimes it is not there, and sometimes it is not clear. It doesn't mean that the way that you are looking is wrong. So I'm still looking if there is any other form of chart will give me the better idea of correction happening. This could be, no, this is my, in the bigger one, A, B, C. So let me see one thing on this one. This is my A, B, C was telling me earlier here, but now the case has changed. This is going to be my A, B, C. The very first target I'll be looking around 168. This one is 161. So basically 164. Earlier we concluded yes, 164 more looks like possibilities in Tesla, even though all the big companies are coming with the good results except Tesla. I mean, their earnings were good. Their guidance for 24 was weaker side, so they were punished and some recalls happening, but that's not a big deal. They can easily fix it. It's a software issues that they are looking. So but I am interested to see that the zigzag patterns over here that I am not able to find, but still there were clues given to me that 164. Let me change it to 15 minutes chart. See something. Let me expand my horizon over here. This one gives me a little bit clear, but still it's not clear to me. This could be my A, B, and C, but still. And in the very first video that I mentioned that the gap, this gap times to time has a tendency to fill out as well. I see something over here. I plotted something here interesting actually. So let's assume that I'm not able to find the 5 waves coming down as per the book to conclude, but I'm looking that wave 1 being developed over here. So let's say if I want to trade something, what is my trade criteria right now? Okay, if I'm trading at this point, I'm not a longer term prospect. Even if I'm longer term, yes, I can tell you how to do my trade. Okay, 188. Let's talk two scenarios. I never short the stocks, so I'm looking for the positive. I'm looking to hold this stock for a positive thing. So one is I'm looking that this market is gonna go up. Based on this, my one equality 208 next up I'm looking, and once this gap fills up, then I'm more positive actually on it. So based on that scenario, if I'm looking, 188 is my entry, or let's say whatever the market opens, 190 over here. The stop loss is this one actually, 180. So 179 is my stop loss, which is 11 bucks, assuming that I'm buying at 190. And what is my profit I am looking is 208, which is around 20 bucks from 190 to 208, 18 bucks. So risk reward is 2 to 1, which is not bad actually at this point. But even if that happens, that I'm looking on wave 5th, that could get me somewhere around, by looking at the chart, 215 to 16. So that's one trade that I'm looking. Or if I'm going to be looking on the negative side, which I don't actually, let's say 164 I'm looking. What should be my stop loss in this trade if I'm taking the negative trade on this one? Let me find my fourth reflex points. Okay, so this will be my reflex points. In short trade, 197 should be my stop loss, and I'll be shorting it right now. And the target that I'll be looking around 164 based on this. So what we are looking the price wise, 20 bucks down, and the risk is 10 bucks, which is also a good trade. So that's Tesla. Let me go back to weekly to observe the characteristic of their weekly waves, which happened in the past for a long time ago. Trend based Fibonacci extension. You have to go, this is my wave 1, this is my end of wave 2. So almost this wave run up to 4.618. Actually, in reality, I have many over here in our golden ratios that I don't use actually, but when you are gauging the chart, you need many different variation. Actually, it doesn't, I don't look for it at the beginning, but yeah, if I'm holding the position, then I start looking closely on the minor waves to see if it's giving me any warnings or not. So this one was it. Based on that, where should be my termination point for wave 5? So I'll be plotting Fibonacci trend based extension. This is my 3, this is my 4. What I'm looking is 0.618 of this one, or zero point 0.1. So 362 or 475. This is 40 bucks and this is 75 bucks, so 110. So we add 55 to this one. 365 plus 55 goes to 370, 410. I see lots of people say, what did I do is 475 and 362. It's basically adjusting, satisfying that yeah, you know that, I mean, it's gonna happen. Many people talk about it. So what did I do? I make this one my 0 point, this one my 1 point, and I'm looking what is my halfway point is 418. And people say, oh yeah, I mean, it went to 410, so it satisfied one scenario as well. If we go based on that theory, yeah, I mean, there will be many. I mean, there is nothing could be wrong. Anyone can say, okay, their point of view is right all the time. But we have to start looking at the clues when the terminations are happening. Very first clue, if we were not able to catch it, was here. Double top being made over here. This one was the reach. Okay, let's say, I mean, it failed to reach. This one failed. So now it was a question that if this value will be hold or not. No, it was given up at this point. So that's the negative trend. Anybody who was holding it till this point, they had a good opportunity to get out of here actually, based on that. And based on this scenario, if we are looking at the correction, it was telling me based on the valuation over here, this was my A actually, this one was my B. So based on this one was 1.618 earlier. So yeah, there were some clues given earlier. Even if this one is my A, this one was my B, it's 1. So now this is my counter trend correction. Let's call me this one a correction actually. So let's see the characteristic of this one. I bet these are 1 and 1.38 or something. This is my A, B, 1.27. I mean, this was telling me that, you know, you should not be a buyer over here. Let's see even this one. This one is still a correction. Let me bring it to daily basis. Oh yeah, we already spoke about this one. So this is Tesla. Let's talk about Amazon to see the characteristics of the chart. Wave 1 basically. Focus on this purple line, if you want to call it. This is my major trend. These are my minor trends on the bigger chart. So many times if we see in it, this one was actually, this could have been my one. Let's call this one of this wave. Let me show you what I'm talking. 0, 1, 2, 3, 4. This could be my 5. This could be my 5. I don't know. This could be my 3 as well. Right now as I'm going, this is my 5th. I was not here. I can say after coming over here, after happening, this is my 3, this is my 4, and this was my 5. But no, as I was going in the live market, if I am here, this was my termination point. That really happened after that, that's fine. But let's analyze the Fibonacci. This one is my 0, this one is my 1. In fact, over here it's more than, let's plot it. Actually, I don't want to give you, it was 80% was given up at this point. It came up to here. You see 78 is here. It was even given up more. So this is my wave 1. Wave 2, I was looking at 1.618 over here, or could be any of this one. In this run, this one was the termination point, 11 bucks. And based on that, where should I be looking at my wave? Based on the equality, it was telling me that 14 bucks you are looking. Or if it's going to be running, then 1.618, that is 1753. Which one was it? 1753. Or that is one projection, and there is other way to project it as well, which is 120 bucks over here, or it could be 28 bucks over here, or it could be anything too over here, 33. So based on that, it gives you clues for the terminations. So wave 2 is typically 50%, 61%, 70 or 78% of the wave 1. So yes, I'll be keeping this one as it is. Wave 3 is typically 1.1618.8% of wave 1 if it's normal case. Mostly expansion will be happening here. Shooting candles, stop loss triggers, gap up openings basically. Wave 3, they are saying basically is wave 3 comes after wave 3, wave 4 it comes after wave 3. So in that case they are saying wave 3 is the basically the strongest wave of any wave, so you should not be expecting is more correction. But in normal scenarios I've seen them happening mostly up to 23 to 50%, and still it's a wave 3. Wave 5 is typically inverse 1.236, 1.618 of wave 4 are equal to wave 1 or 0.61.8 of wave 3. So what they are saying that basically there should be two waves. In normal scenarios, two waves are happening of the equal length, and one wave is expansion wave happening. So if your wave one is normal, like it's basically complex wave. Wave 3 you got the clear shooting one. Then next wave 5, once the wave 3 is concluded, the wave 5 you assume that okay it will be the equal of wave 1 or 0.618 of wave 1 plus 3. So let's plot that one, and we will call it a day on this characteristic. I need to revisit this chart again. um, this is 1 2 3 4 5 over here. So the wave flipped. This is my one. I have actually plotted everything here. So this is my wave 4. So based on the equality, it's telling me the next wave is gonna be over here. No, it was not the case. Then the other scenario is telling me it's gonna end here. At one point when it was going up, it finished over here, it came down. But do not go on those ratios, that those are the basic, oh yeah, it said that these are the normal values that you expect. No, I do not see that happening on wave 1. But what we are looking is equal to wave 1 or 61.8 of wave 1.3, or equal to wave 1 and wave 3 as well, could be possibilities. The more interesting thing is correction that is coming after wave 5 is going to be the bigger than wave 2 and wave 4, or equal. If equal, then could be in the extension here. So this is the complex correction that we will talk more in detail in coming videos. But that's pretty much for the characteristics of the wave. We do not have to get rigid on the bold points over here, but just a clue that what we are expecting in our wave counts, how to validate our wave count. So this was my wave 1. Let me clear it up. This one was my wave 1, 2, 3, 4, and the fifth wave, my bigger fifth wave, ended here. Right now I'm plotting in the current scenario of the Amazon. Let's talk about that one as well. Let me use this Fibonacci trend I have here. This is my wave 1, this is my wave 2. Wave 2 corrected wave 1. If you see, the valuation was 78.78% was given. What is the valuation of wave 3? Came to exit 1.618 and a little bit higher. Actually, this one was not termination over here. So this one was my wave 3 ending here. Wave 4 is here. What is my normal wave 5? I'm looking. Very first one I'm looking 152, second I'm looking 172 here. What we are right now, 172. Based on the market result, actually Amazon came with the strongest result, which was market expecting, and it met, and the forecasting was better as well. So what we are expecting, a run in this one. Yes, a bull case scenario is being expected. We are looking next spot. What I'm looking is around 1.8 185. Actually, this is one way to calculate the very first termination point, if it's going to happen, and you have to start looking for the clue around that one. Or what could be the next scenario that I'm looking based on the 0.618, it's telling me, which we have already passed. So very first one is coming 183. So 183, 182, actually 183 is my good spot to see and analyze the stock again, what's developing over here. Or if it's the bull scenario, I mean, even the stronger run over here. So what I'm looking is 223 in times to come. But before that, 183 has to happen, and Amazon will be trading in the highest it was ever before was 189, 190. So once it's 183, 190 comes, we will see some resistance. Then we will revise again at 201 to see more patterns. Yes, it's coming, but there is no guarantee in the market right now. So that's it pretty much. It went almost 50 minutes for those videos. Thank you for watching, and I do have the WhatsApp channel as well, so if you want to subscribe, please. It's Elliott Wave channels, and I do post my videos on YouTube. That's where you might be watching right now, and I will have a description about the channel in my YouTube video comments as well. So please, if you like what you see and if you want to subscribe, please feel free. Thank you for watching, and I'll be posting one video as well today that will go through some stocks: Uber, Intel, Starbucks, Amazon, and Tesla, based on what we were looking same day last week and what we are looking for this upcoming week. So that way you get the basic idea as well on how to adjust and what to look for your charts. Thank you.